All right, so we are live. So welcome back to Dapp University. So today we're going to be talking about a question that is on the top of everybody's mind right now, which is, when is this cryptocurrency bear market going to end? When are we going to see cryptocurrency prices recover so we can start, trending back towards all-time highs and eventually start breaking new all-time highs and, doing a lot of more exciting stuff in this space. So we're talking about that. We're actually looking at some data. A lot of people are wrong in how they're trying to call the bottom of this bear market, how they're trying to use certain tools to do that. I'm going to talk about that in this video. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We got, let's see here. We got Above Realty Automatic Beats. All right, welcome. So let's just see here. Let's go ahead and jump into this. Looks like, let's see here. I wonder if my notifications are working. My YouTube video did not publish. Okay, let's see here. I'm gonna make sure I'm not on a unlisted video, guys. 1 second. Hold on. Sorry, had a little problem live stream. All right, so let's go ahead and jump into this. So the crypto bear market. Okay, so it's a question that's on top of everybody's mind: is when is this going to end? Okay, because we've seen cryptocurrency prices, trending downward for a very long time, and the question that's top of mind for a lot of people is like, hey, when are we going to see a reversal? When can we start seeing crypto make, head back towards all-time highs? Well, I'm going to talk about how a lot of people are getting this wrong. They're using the wrong statistics and wrong metrics and tools to actually measure this. And about the right way to do that, and what we can do to try to forecast, how long this period is going to last. So let's start off with the first thing, which way everybody's doing wrong. Okay, so a lot of people are sitting there trying to look at technical analysis to try to call the bottom of the crypto price trends right now to forecast when we might see some sort of reversal. So let me just pull up this here. So for example, let me just pull this, jump on my screen here. So for example, you got lots of people are sitting here looking at these charts on TradingView and trying to draw fancy lines on here and use technical analysis to say, hey, this is when we think the bottom is going to be. If we see this pattern forming, and if Bitcoin, follows through on this pattern, then it's, going to reverse course, and the bottom's going to be, and we're start trending back towards all-time highs. So, I think it doesn't pass the smell test for a lot of people. Of course, technical analysis has its place, all right, and looking at overall trends to see, hey, when is it broken out of a downtrend? But this always has to be used with other things, which are the fundamentals, okay? So using technical analysis by itself is not going to give us any good indication of where the bottom is for this crypto cycle, okay, and how long it's actually going to last. Okay, so what's another big sort of mistake that I think a lot of people are making? So if you can't use technical analysis, what should you use? All right, so part of this is trying to understand what actually causes cryptocurrency prices to change at all. Okay, why do cryptocurrency prices go up? They're going down now. What will cause that to change? So a lot of people are trying to answer that question, but they're also doing this the wrong way. So how they're doing this wrong way, a couple of ways. One is that they are essentially trying to use the past to forecast the future. They're going to say, okay, well, crypto has always had these 4-year cycles, okay, so it's probably going to last X amount of time based on the past, okay, or we had a bear market that was this long in the past, so that's probably going to play out in a really similar fashion this time, where essentially, we saw crypto go down for this amount of time. Here was the bottom. This was 18, this was 10 months, 12 months, whatever it is. And so for that same reason, okay, if you look at, this past cycle, that it's going to go down the same amount of time, okay, and that we're going to see a bottom at a blank date based on that extrapolation, okay? So that's definitely not the best way to do it either. Another way that people get this wrong is trying to say, like, hey, it is basically based on superstitions that have existed in the crypto space for a very long time. So, some of the superstitions are, I personally think, sort of the Bitcoin halving thesis, that Bitcoin is that the crypto cycles basically revolve around the crypto halving, that, you know, the Bitcoin halving basically every 4 years. Bitcoin reduces its block production by, you know, 50%, hence the halving, and that causes, you know, the supply side shock for Bitcoin. And, you know, that's ultimately what causes the price to moon because there's way less Bitcoin. All right. I mean, I think that can have some impact on the Bitcoin price, but I think that has way less of a factor on, you know, Bitcoin doing what it does. Now, you could say that, you know, everybody sort of subscribing to a narrative becomes a self-fulfilling prophecy. I don't think that's good enough, especially for this next thing, because we've seen so many models that try to use the Bitcoin halving to forecast future price of Bitcoin, particularly in the last cycle, just get absolutely wrecked. I mean, they were so far off, like it's not even funny. So I think a lot of those have been invalidated. And a lot of people are not going to trust that type of thesis anymore that just simply tries to blindly follow the Bitcoin halving every 4 years. So if you can't do that, then what can you do? Well, let's talk about what my opinion is the biggest fundamental reason why crypto is taking a nosedive and has been since the beginning of the year. Well, the biggest reason, in my opinion, of course, is that the crypto is being highly affected by what's going on in the broader markets, okay? So what's going on with stocks, what's going on in every other market, okay? So the macroeconomic scene is the biggest headwind that crypto is facing right now, okay? And basically until that ends up, you know, seeing some resolution on the macro front with inflation, you know, with the central bank monetary policy with interest rates, all that type of stuff. Until we see a change of course in that, like there's no reason to think that we would see crypto really start trending back toward its all-time highs, in my opinion, okay? Could there be some sort of other factor that actually changes this? It very well could, but I think that's the biggest factor on the table. So let's try to look at how long it would take for that type of resolution to occur. Okay, so let's look at some other bear markets in past history for stocks and crypto. So here's the point I'm trying to make. So basically, crypto and stocks are highly correlated right now. And so I don't think we're going to see crypto recovery until we start seeing some sort of recovery in the stock market. Now, we can actually start to see some recovery in the stock market before, you know, we see some type of major change in macro policy. So basically what I'm saying is a lot of people looking for like a Fed pivot before stocks start actually changing course. And if we do get some type of Fed pivot, I definitely think that we can see some type of course correction in stocks. I mean, it obviously would. That being said, I don't think it totally takes that in order to start seeing stocks become green across the board. So in many ways, I think we want to see stocks leading that. So how long have prior bear markets lasted in the stock market? Okay, so I think this is going to help give us a clue onto how long we would be in this sort of bearish territory for crypto as well. Because like I'm saying, I think stocks are highly correlated to crypto. Looking at the past performance of the stock market is not necessarily going to give us an insight into how long it would take the Fed to accomplish their monetary goals and start changing how they handle interest rates. But I don't think we have to fully get there before we start seeing some recovery in stocks. Because, I mean, yeah, for lots of reasons. But let's look at some of these past bear markets and try to forecast how long this particular one could last based upon that. So, if you look at all the bear markets that have happened that we have all the data for, you can see them here listed on the page, but the average length is really about 13 months, okay? And the average recovery time is about 22 to 24 months. Okay, so those are averages. That's not necessarily how long any individual is going to last. But if we apply those same statistics to our current situation, so if let's say we started measuring from the peak back in November, well, that average is going to put us, towards the end of this year. And so we're already, over halfway through that. We're already over halfway through that. Okay, and the recovery time, basically getting back to what it was 22 to 24 months. That would put us back at the end of the following year. Okay. So now again, that's not necessarily how long it's going to take. That's an average. It could be sooner than that. It could be after that. But statistically speaking, that's how long it's taken, these U.S. markets to kind of run their course. Now, there's a couple of things to consider here. So earlier I talked about you can't use the past to forecast, history in crypto. That's definitely true, okay? But what I'm saying is, and you can't perfectly do that with stocks either, but what I'm saying is that I think what's happening in the stock market is having a much bigger impact on what's happening than just the crypto-specific market. Crypto doesn't really exist in isolation. And so the best that we can do to try to forecast what's going to happen in the broader economy, the broader markets, I don't think we have to see a full economic recovery in order for stocks to start, getting out of a bear market. It could take some time for them to get back to their, previous all-time highs. That could be a big factor. But in order for stocks to just change direction, we need to start to see some sort of recovery. Would a Fed pivot obviously trigger that? I think so. Okay. But can we start to see that recovery before an obvious event like that happened? I do also think so as well. Because we have histories in the past. We have instances in the past where basically the stock market was going up while interest rates were also climbing. Okay. There isn't always a perfect inverse correlation between interest rates and stock performance, especially after we've seen this type of correction. Like, in my opinion, again, I don't claim to be some sort of macroeconomics expert in this channel, but it doesn't take a genius to see what's going on. Most of what I try to do is talk about what's happening in the broader conversation and tell you why it's important and how that impacts crypto, because that's important literacy to have when you're participating in this space. But basically, we've seen this performance over the past 13 months or so, but based on this prior history, that we could sort of start to see the same type of termination at the end of potentially 2022. About halfway through that, a road to recovery could be at the end of 2024. Now, the funny part is, earlier before, I was also talking about how I think we have these sort of superstitions in the crypto space that crypto is pre-programmed to these 4-year cycles that, correspond to the Bitcoin halving. Now, the really, really ironic part is if it were to take that amount of time for the stock market to recover and crypto was highly correlated to that, then, that could be putting us at the start of 2024 for crypto to, for the stock market to making new all-time highs. Now, I'm not saying that crypto is going to perfectly track the stock market in the sense of, crypto is going to be making new all-time highs and the stock market does. That's not what I'm saying. I'm talking about the correlation in terms of directionality of the move. Okay. So, the real ironic thing is if the stock market's making new all-time highs at the beginning of 2024, we have a Bitcoin halving coming up in 2024. And, if just by sheer coincidence we start to create a new cycle, then that could further perpetuate the superstition of the Bitcoin, crypto 4-year cycles based upon the, the pre-programmed halving and the deterministic nature of that. So definitely that is the kind of the ironic part here. The other thing to think about is what else causes people to get into the crypto space? Because, you have to think about sort of fundamentals. Crypto is a supply and demand based market. When you talk about the Bitcoin halving or crypto, halvings, all that type of stuff, or maybe issuance reduction, like we talk about Ether moving to proof of stake and being the triple halving, that's all supply side. Okay, that's all supply side of the equation. Price is a function of supply and demand. So you could be decreasing the supply that's available on the market, but if the demand drops, that doesn't really affect the price that much. Okay, so you fundamentally either need to sustain demand while supply is going down, or really what you want to do is increase demand overall, and the supply decrease is just a force multiplier with that increasing demand. So what could cause that demand to increase? Well, just like every past crypto cycle, new technology has pretty much always been highly correlated with price going up. Okay. Now, I say correlated because correlation and causation are very different things, okay? And it's all, it's hard to prove one or the other. I'm just going to stick with correlation for now. But basically, new technology hitting the space has always been highly correlated. And it's particularly new technology that, is somewhat speculative in nature that has to do with financial use cases, okay? We had ICOs in 2017. We had DeFi and NFTs in 2021. So another big thing is new technology hitting the scene. Now, how long does that take? Because that takes time. It's not like you can just snap your fingers and then come up with groundbreaking technology that does something novel with blockchain that, people can get in on and get on early. Well, oddly enough, we see that type of thing coming onto the scene again. Okay. Well, let me rephrase that. Oddly enough, we see that amount of time sort of lining up where we see, the past bear markets in the equities markets, basically lasting about, from the time of it going down to going back up, about a 2-year recovery. Oddly enough, that being about the same amount of time that the last sort of crypto bear market happened. Okay, this amount of time, about a year, and then about a year of this before we started doing this. Okay, that put us into this. That's about the same amount of time that we started to see the evolution of new technology really hit the scene that started getting adoption. Because I'll kind of tell you from history. I mean, I was here when this happened. Okay, I started my YouTube channel like about here. Okay. And so I worked through this entire thing, okay, up until this point where we are now. So right here, what was happening in the crypto space? Basically, we had ICOs, we had tokens, we had NFTs, but not the NFTs that you're thinking about today. We had the seeds for all that stuff, okay? And then, right about here is when we started seeing, we had DeFi was an idea in people's heads, okay? And then right here is about when I first discovered, some of the new, maybe right here, maybe like right here, is when I discovered some of the first, DeFi applications that were deployed the blockchain that had real users. I mean, I remember the aha moment for me with DeFi was like seeing compound finance in production and seeing like a savings and lendings app where you could actually get interest on your crypto, like stable coins that was competitive to your bank account. And that was like a huge paradigm shift. I was like, whoa, that's big, right? So there's that. And then other, about right here is when you started to see other DeFi applications and their tokens really start to moon. Okay, this is sort of the first wave of it. This was like Aave and Synthetics, all right, have like massive run-ups, about in here sometime, roughly speaking, is when you saw some of those tokens make 100x off their lows, okay? And those were sort of the morning stars of the crypto bull run. Before all this stuff happened, like you could have made 100x in crypto off the lows, like around here, before everybody else was talking about it, when DeFi was a really small type of thing with really just two major players, Aave and Synthetics, okay? Those two had crazy runs early on. Because we had some others like Chainlink, okay, kind of doing their thing. Chainlink was a thing back through here. Oracle's, I wouldn't call it just DeFi in itself, because you need Chainlink's more of an infrastructure project. I'm thinking about actual applications that people can use. You need something else to really make Chainlink make sense. But like stuff like Aave and Synthetics were coming out. So anyways, that was about like if you measure, that was all happening within, a year and change of this. So that's how long it takes for that new technology, typically speaking, to hit the scene. Now, part of that depends on the complexity of the technology. I think a lot of people have high hopes for like blockchain-based games, hitting the scene and, making a huge splash and basically, taking the world by storm. Some of that's going to take longer simply because the complexity of creating a competitive game is really, really hard. I think people have kind of inflated expectations about the metaverse probably and how long that's actually going to take. So it depends on the complexity of the thing. But I do think that we can, in a very similar amount of time, maybe like 12 to 18 months from this, peak, which would be, maybe here, really start to see some big new tech hit the scene that gains rapid adoption. 'Cause you have to understand, and it could even happen faster during this time because essentially, like, you have so many people who are highly adapted to how crypto works now and are super networked. And so we can start to see these things really explode much faster than they did before. Okay. So that's definitely something to consider, is we could see all this stuff happen in a much smaller time frame, and that new technology could start getting used, before, maybe crypto prices, start to recover based on macroeconomic factors. But the seeds for the technology could be placed sooner, and then you start to see the other stuff start to snowball. So, in my opinion, the bear market, instead of saying how long is the bear market going to last, the real thing is, the bull market, in my opinion, will happen whenever you see the sort of the perfect storm of new shiny stuff in crypto, which can happen within the next, I'm saying 18 months from that peak. That's 12 months from now. Okay, we're potentially halfway through this, right? We could see a bottom. I mean, it's anybody's guess. Like I said, the stuff before is an average. Like we could be at a bottom now. Okay, we could be a bottom at the end of this year. Okay, but what do we need to start seeing? Really ripping off new all-time highs. I do think we need some of that new stuff, and I think that we've got enough time to make that happen. Now, that being said, the other thing that's different about this time, people talk about, is this time the exact same as last time? How is this time different? I think this time is different in a lot of ways because, I think a lot of people are sitting on the sideline going like, hey, I'm just ready to buy back in. Like, I'm not thinking that crypto is going away. That was the question last time, was like, hey, this crypto thing is not even viable, is it? There's a lot of doubt about that. And so a lot of people are just holding off or not jumping in. I think this time's totally different in the fact that they see a lot of future potential in crypto and they're just waiting to deploy new capital. Now, there's the caveats there that I think some people are scared because, crypto's never gone through, a recession like what I think we're probably in right now. Of course, we don't have the official data on that just yet, but we're going to soon, and it's not going to surprise me if we find out that we, in fact, did print a second quarter of negative GDP growth. That's what constitutes a textbook recession, technically speaking. Okay, so that I think that is something that's causing a lot of people, to kind of be scared. Just general macroeconomic fears that if we go through something that's if we're just getting started and things get way, way worse, that they just don't want to be overexposed to crypto. I totally get that. So I think that's one thing that's kind of causing some of the depressed prices as well. But yeah, I think there's a lot of amazing stuff coming in the pike. It's going to take some time. Those are some perspectives on how long this could last based upon prior stock market performance. And I think we are highly correlated to equities right now. So that being said, let's take a look here. So, on the daily, equities aren't looking great. We've got some big things coming down the pike soon that are going to tell us, how CPI is doing, how these other things are doing that could give us an indication on how the market will perform. All right, I'm going to put you in timeout. How does slashing work? How do the nodes agree on who to slash and when? For example, if they improperly validate a transaction, Will all the nodes just not accept the new block and individually adjust the validator's balance according to what the algorithm says it should? Just pick a new validator. Yeah, that's a good question. So my understanding is it happens basically algorithmically at the EVM level itself. So the EVM understands what a valid block is, and essentially, if you try to produce an invalid block, then you just get slashed. And my understanding is that that's opportunities passed on to the next validator. Because validation is like a round robin type thing. Like you're in a queue, and then like it's your turn to validate a new block. In 5 to 10 years, the crypto bear market will end. I think it'll end sooner than that for sure. With that being said, we could have some catastrophe at the macro level. So the other thing about this is, though, it doesn't really change that much the opportunity if you're trying to break into the blockchain industry, okay? Because at the end of the day, that's what I try to help you do in this channel. Of course, I care about the crypto space. Crypto prices are one of the best things that attract new people into the space. I mean, I want people here to take full advantage of the opportunity in crypto. Of course, not financial advice, thinking of buying a crypto. But a lot of people want to do that. I'm behind it, 100%. I'll totally do that. But at the end of the day, the real opportunity for most people is to learn a high-income skill like becoming a blockchain developer, because that's one of the best ways to really make a life-changing result in crypto. Because if you're going to make it in crypto, you might have to really, you're going to have to be exposed with the amount of money that's going to make you sick to your stomach every time you see it go up and down, okay? And, a lot of people, the common advice is don't invest more than you can afford to lose, but that's not really a strategy for making it big in crypto either, because at some point, like, you have to really risk in order to make a life-changing amount of money. So a lot of people just aren't going to do that, or aren't cut out for that, or can't do that. And so the best way is to change your career and get a high income skill that can increase your cash flow and then get you working on something exciting, okay? Because most people don't like their job and they don't feel like they're paid well. And so crypto can fix both those problems. And now, because I was here during the last 2018, 2019 bear market, and we saw, crypto was doing horribly. People thought I was going to die, but we still had big demand for blockchain developers. Were there some companies that went under who like raised ICO funds? Yeah, that definitely happened. But in aggregate, there's still super high demand for blockchain developers in this space. And that same type of thing is happening now. Will there be some people that like go under, or like we saw some, layoffs at the beginning of this year? Yeah, that has happened. But for the most part, like for every example of, some sort of layoff that happened, there was at least 1 to 2 other people of the exact same size company saying like, hey, here, we'll hire you to work for us instead. I mean, every time I see somebody be like, hey, because that's not a crypto specific problem either. Basically, we had a lot of overhiring happen in the tech sector. It was, some crypto companies were, did that too. But, every time I see somebody talking about that, we just see insane amounts of like replies on social media of like, we need to hire talent now. Like, we'll hire you. So demand is not going away from blockchain developers. So that's the big opportunity. And right now, while the space is quiet, is a perfect time to double down and, on your technical skills and master that while the space is quiet. I mean, that's really what I did during the last major cryptocurrency, bear market. I mean, I had gotten into blockchain before the bubble popped, right? I started my YouTube channel pretty early on in that process. But, instead of just saying like, oh, I learned this, cool. It's like, well, I want to really take this to the next level. And that's exactly what I did during that time. And it paid off big time. So how will the tech shape identity management for the individual? So yeah, decentralized identity is a big sort of question mark, but it's a nut that I think is going to get cracked in the crypto space. I think the easiest low hanging fruit to accomplish there is really just like your online identity, like your social identity. Okay, so there's multiple levels to this. Sorry, let me just make a note here. I actually had an idea for a video, so I'm gonna write it down. So basically, I think the low hanging fruit that gets solved here first is your online identity, and that's already happening, in a lot of ways. So think about what is your online identity now? It's your social media handles, it's your email address, it's your Facebook username, it's your Instagram username, it's your Twitter username. Okay, but that's fragmented. Okay, you have a bazillion different email addresses. Probably, maybe not. Maybe it's the same one, but you probably have multiple social media handles. Okay, you have all these siloed accounts inside of, different databases. Sorry, I'm making another note here. I had another video idea. Anytime I have a video idea, I gotta write it down because I don't want to lose it. So we're starting to solve some of that problem already with blockchain. So think about like ENS handles. So .eth usernames. Okay, you see these all over the place. That has like on-chain reputation, where basically, if you have that handle, you can see everything they've done on chain, and you can authenticate to multiple applications with that same username. Okay, and then also, you could do things like bring people together inside communities who already have certain interests and verified interests by the blockchain itself. So if you own a certain NFT, then you can automatically be added to a community where you can connect with people like that. Like, we're already starting to see the groundwork for that digital identity laid. It's sort of that pseudonymous identity that you can create on the internet, your digital life. That's kind of the basis for like the metaverse premise in the first place. So that's already starting. Okay. Now, I think the next level to identity is basically seeing like, how can you prove that you are you on the blockchain? So who asked this question? So it's Charles. So Charles, like, how do you prove? Like, so Charles could come up with a username, like crypto degen, 420 .eth, and then that's their username that they want to be known by online, and then they can accumulate all this reputation. That's sort of like use case number one. That kind of already exists, and we're building that out more and more. So the next hard problem is how do you basically represent Charles B online, and then basically like prove that you are Charles B and that you can do things on Charles B's behalf online, like maybe sign a document that guarantees that Charles B actually signed this, like a digital signature. Okay, or that you are Charles B and you are authorized to transfer money on Charles B's behalf, or you can see your your educational credentials or your employment history. That is the next sort of step, and that's harder to crack because for a couple reasons. One is privacy. We have issues with privacy right now that I think can be solved. We're just kind of scratching the surface on that. The other is basically setting up the identity in the first place. Okay, so we have to have some sort of authentication that proves that you are you, and some that can actually guarantee your identity while you're setting it up. Okay, that's the other factor. And the final factor is recovery. So what happens if you lose the keys to that? Well, we talked yesterday about some of these new types of wallets that are smart contract based, that aren't just based on externally owned accounts. Okay, I think those are potential potential answers to some of those questions too. So that's a harder nut to crack, but we're already starting to see digital identity in the sort of metaverse online space. That's a lot easier thing because that's a big compelling use case for social media where you can take all your history with you from app to app without having to create a new social graph from scratch. All right, great questions, everybody. Somebody says, will blockchain developers still be in need after this crash? Yeah, of course they will. Yeah, I was talking about that a minute ago. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It helps these videos out so the more people learn about blockchain. And if you're as fast with this technology, how can you get started today? You can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you'd like those, you want to take the next step, or hey, maybe you'll take a master shortcut entirely. I actually have how to become a blockchain master, step by step, start to finish, over at dappuniversity.com/bootcamp. And we're having the Blockchain Bootcamp version 2 launch coming up next week on Thursday, July 14th. All right, so make sure you hold your spot with the link down below. And I think that one of my videos yesterday, I said it was this Thursday, but it's actually next Thursday. So it's Thursday, July 14th. So that's all I got. Great questions. And until next time, thanks for watching Dapp University.